So we got two big problems that Hedera needs to overcome in order for us to see the level of adoption that we're looking for. Ladies and gentlemen, I want to welcome you back to another edition of DHN. I'm your host, as always, Wade Teamer. Before we get into what those problems are, let me first thank the Hedera community. Guys, I did not expect this type of turnout, but here we are. After 600 plus votes and more than 5,000 views on X, the Hedera community, you can't say that they don't know how to come together, guys. And this was all in the last 48 hours. Now, on top of that, I've gotten amazing feedback from members of the Hedera community. I've gotten to connect with some very influential players in the space. There are plans moving forward. This decision to focus in on one asset was not made lightly. The reason that I decided to do this is because my next step in this market is to go past YouTube influencer. I've been sitting here for the last 4 to 5 years making content about these companies, not knowing that the skills that I was developing was going to be needed by these companies very soon. So we'll touch more about that a little bit later. Let's get into these big problems. The number one being the token unlocks, the token release schedule, or as some like to call it, token dumping, right? This is the discussion that was coming from members of the community that I was observing over the weekend. So of course I had to do my own bit of digging. And guys, I found some information that's going to provide some clarity to you. So if you've been holding HBAR for a little bit, number of years, or you just made your first purchase a week ago, you stumbled upon a gem, and let's dive into it. Now, this is the original release schedule that was set in place back in 2019. This is the earliest stages of Hedera when it was still called Hedera Hashgraph. You can also see that the token unlocks would have continued well into 2033. Now, keep in mind here, this release schedule was set in place during a time where market conditions were one way. I can imagine Lehman Baird, Mance Harmon, the creators of Hedera, there was a little bit of doubt that this network would even make it that far, despite their intention on creating a 100-year company. So the good thing is, though, since then, a lot of things have happened that have affected the release schedule for these HBAR. Biggest event being in 2021, when the circulating supply, quote unquote, of HBARs increased across all of the market research and data reporting companies. We're talking about CoinMarketCap, CoinGecko, sites like that. Well, I found this article here, courtesy of hedera.zendesk.com. I'll leave a link to this page in the show notes in the description. But the biggest reason, well, one of the reasons, is that Hedera introduced a new treasury management reporting system, and this new report only quantifies released supply, and Hedera no longer defines a single circulating supply amount. The effect of this new reporting methodology will likely be an increase in the amount of HBARs considered circulating by market research companies, because some accounts controlled by an individual or entity other than Hedera previously classified as non-circulating and are now considered release. Simply what this did was put all of the HBARs that are all out there into that pool of what can be considered a circulating supply. So there were HBARs on record that were being held by people that were outside of the immediate Hedera camp that in the beginning weren't being reported. After this adjustment in 2021, those HBARs were now reported. Secondly, Hedera introduced us to the HBAR Foundation. And upon that initial introduction, 5.3 billion HBARs went to them for the development of the network, to provide grants to developers, startups, the list goes on. That's a usual business practice. So we have the increase in circulating supply back in 2021. On top of that, in Hedera's earliest days, they didn't do a typical ICO. They raised capital to develop the network through the issuance of simple agreements for future tokens. Sounds completely complicated, but this was the most genius thing Hedera could have done, because doing it this way, whereas a typical asset will have an ICO, an IDO, this simple agreement for future tokens protected Hedera from being registered as a security. That would explain why we haven't heard Hedera being brought up in any Wells notices or any case files in relation to the SEC. They did it differently. Another interesting detail I found was that in the beginning, the first series funding round was only 40 purchasers. They only raised about $5 million. And this was taking place in 2017, 2018. Can you imagine being approached back then? Someone come up to you and say, hey, you want to invest in my crypto? You would have probably looked at them like they were crazy. Would have been the biggest mistake of your life though. But they go on to state that following 2 additional amendments approved by the holders of SAFT Series 1 in August of 2019 and October, coins from SAFT Series 1 are being released to purchasers on a more gradual basis to align with expected network growth. 2% were released to Series 1 purchasers on the date of open access. 2% were released in the 7 days following, and the remainder of coins are being released at least quarterly over a period that ends in September of 2023. That's a very key date there, guys. It's going to be very relevant here in just a few minutes. But the initial round of purchasers of HBAR, their distribution schedule essentially ended last year. So we're dealing with Series 2 and Series 3 investors. And you'd be interested to know that their schedule comes to an end this year, right? Because down here you see this is the original release schedule, token release schedule for the Hedera network that I'm basing this off of. And you can see both setups were to last 4 years, right? 20% annually for 4 years. And if you go down here, current amended release schedule before exchange offer, Tier 1 is over here to the left, total of 48 months, takes us to 2024. Tier 2, 36 months, again, bringing us to 2024. This one, the first one was in 2019. So correction, that is how we got to 2023. This next one, 2021, 36 months, 2024. So this indicates to me that this token release schedule, these token unlocks, they were part of a 4-year plan to return the value that they initially got from early investors. I don't find that to be criminal at all, because had they not done it, well, Hedera's price would probably be flat, like a rug pull type flat. So they're handling their business. Now, if we look at the current numbers as of the report that was given in May of last year, they tell us what we were at in Q4 of 2023, 62.82%. Very important number there. And where we sit right now is 71.52%. That's this number down here, totally fully adjusted rate, right? 35 billion HBARs in circulation. Let's double check that by going to one of these market research and reporting sites, would be CoinMarketCap, and you can see 71.52. Somebody's spilling some HBAR, but those numbers line up. Now, the reason why I showed you that is because there is a video circulating around the Hedera webs, ladies and gentlemen. Nathan Phillips breaks down the potential inflation as well as deflationary timeline for the Hedera token. Take a listen to this.
Current distribution of HBAR tokens, a total of 50 billion HBAR was minted, and no more HBAR can be created. Essentially, by the end of 2025, you can expect full allocation and the full unreleased supply to be in the circulating supply. So what this means for your HBAR investment is that the active circulating supply of HBAR will be inflated until 2025. So assuming the market cap stays the same, this means that inflation from this distribution will erode the value of your HBARs, which stands at an average inflation rate of 4% each month. However, after 2025, HBAR turns into a deflationary currency, similar to Bitcoin. So you can expect the value of HBAR to increase based on upward buying pressure. This is based on the actual utility of HBAR token.
This is the best explanation I've heard thus far, and it motivated me to do even more digging, right? The source where he got those charts from, that original plan, can actually be found here, hedera.com/papers. And you go down to the bottom, you'll see Hedera HBAR economics deep dive into the dual role. Talks about tokenomics within this paper, updated June 3rd of 2020. And you can see here that chart estimated through 2025. I've seen questioning online as to whether or not this has changed. I haven't heard or seen any formal announcements of this schedule being changed. So as it stands right now, the year is 2025, right? And we can go back to the community just to double down on this, guys, because this is another thread about release schedules that's a bit more fleshed out than the first one here. Remember, a moment ago I said September of 2023 would be very relevant. This comment from PingPack was posted in September of 2023, and we know this by reading the second sentence. It says, we'll be at 68% by the end of this quarter. As it goes, they release 4% more tokens every quarter. Now we are in the third quarter. So we have 1 quarter left of this year, October, November, December. Let's jump back over here to our treasury report from May of last year, Q3 2023, 62.23%. This guy was on to something. So he continues though, and he gives us an exact date, presumably when all of these tokens should be unlocked. He says we would need 8 more quarters to reach 100%, which means that in the fall of 2025, we will have all tokens released. Since December 2025 will be the peak for the next bull run, Hedera will be in a very interesting position to aim for real value, since investors know that no more tokens will be released anymore. What's going to happen is that Hedera is going to become deflationary. And if you don't know what that means, deflationary mechanics exist in Ethereum, they exist in Bitcoin, they exist in Binance, and they also exist in a token called Render. Last year, Render instituted a burn mint equilibrium mechanism, which is a fancy word for an upgrade, but this upgrade made the token deflationary. This was the summer of last year, I think around September. Price of Render was $1.50. It has 8x'd since then, strictly off of deflationary mechanics, in my humble opinion. So if deflationary mechanics are about to come to Hedera, the window for the token dumping, the token unlocking, all of that discussion, that window is shutting. And it'll be closed completely by the end of the year. Because once we get to January of 2025, the circulating supply for HBAR, you'll go over to CoinMarketCap, and that won't say 71.52%. It'll say something like 90.12%, and people are going to start going crazy, which is another lesson in and of itself. If you're looking into projects, whether they're HBAR or not, focus on that circulating supply, because if it's too low, you're going to be waiting a while. But if it's at somewhere like 80, 90%, 95%, then you're talking about some real price action right there. So just keep that in mind, folks. Now, let's talk a little bit about the second problem. I don't know if you guys have seen this clip yet, but you know, I've been going Hedera crazy on X, and Sunday I decided to put this little piece together because I've stumbled upon karate combat, ladies and gentlemen. Now, ain't nothing changed. Y'all know I'm a wrestling nerd, but this is kind of cool. This is kind of cool. So I put this little clip together, guys, because I hadn't seen anybody else do it, which highlights the second problem is, in the words of members of the Hedera community, where the hell is the marketing, right? And that also lends to why the decision was made to focus in on one asset. Like I said, guys, I've been sitting here making these videos for almost 5 years now. And without realizing it, I have developed a skill set that is very valuable to these companies, to companies like Hedera. A lot of people in the community have been talking about the fact that there's a lack of marketing leadership in Hedera. There's a disconnect between the people at the top and the retail investors. Well, see, here's my thing. This entire network is open source in every truest sense of the word. And I'm actually going to jump over to this Reddit thread here because it's powerful. But I want to make this point. With all of these networks being open source, you got to essentially look at it like this. Let's say this was a gold channel, right? I talked about gold all the time. Just gold this, gold that, gold, 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 gold. Gold isn't paying me to do that. There isn't a gold company there are gold companies that distribute gold. But the point I'm making here, there's no centralized authority dictating my decision to tell you about gold all the time. You know what I'm saying? That's a reflection of what it's like here in crypto space, where with an open source technology, it's really free reign. So the reason why companies like Hedera and other open source technologies may not have the strongest marketing, it wasn't written in the original plans, a marketing department. It wasn't. They didn't anticipate the type of applications that would come to the network that would require effective marketing campaigns. And here's where the beautiful thing about Karate Combat really lands on me. This business model, like I said in this post, will be repeated. And the next person that does it, let's just hope it's not Solana. I'll just say that. I'll also say this business model can be repeated on Hedera again for another sport. What happens when that happens? I have a piece of content on Karate Combat, writing it up right now. This was a genius idea. A genius idea. If you don't know, simply Karate Combat, they use Hedera for their marketplace, fan engagement, and their token. However, with Hedera being the software in the middle, it plays a crucial role to the entire business model for for Karate Combat. What I'm getting at here is that the marketing that everyone is desiring to have wasn't originally in the plan. But now that the applications exist that require marketing on that level, oh, you best to believe they're coming. And I'm just going to put it that way. Now we're going to wrap with this thread here because it's powerful. This is courtesy of Oak 1337. In this post, he put forth three very important arguments. One, there's a disconnect between the retail community and the enterprise community from Hedera's standpoint. Hedera seems to have been leaning more so into enterprise and neglecting retail. This gentleman puts forth the argument that companies, in order for them to thrive, must have a much stronger retail community, investors, customers, than their enterprise. That argument was heavily fought against in the comments down here. But he also proposed a permanent 10% staking reward, which on the surface, yeah, is attractive. But as they go into in the comments here, would be a bigger problem for Hedera than even I realized. I don't know if you guys remember 2022-ish, the staking rate across the entire Hedera network was 6%. Then they started to drastically change it, and a lot of people were confused as to why. Well, see, let me show you this comment here. It's courtesy of Andy R64, Nintendo. Staking rewards across the board were 6%. Then they began to reduce it. Everybody was wondering why. This response gave me clarity on that situation. He goes into a scenario. Let's say the average retail holder holds 100,000 HBAR. At the current price of 8 cents, that's an average portfolio value of $8,000. It's funny how HBAR's price is 8 cents right now, but at the current negligible staking reward of 0.5%, this earns $40 annually on an $8,000 portfolio. That's provided the holder does not move any of their HBAR. Good thing, especially through Hashback, staking is liquid on HBAR, which means you don't have to worry about locking in any of your funds. So if you want to stake a little bit and play with a little bit, you can. Another reason why I love the network. At 10%, they earn $800, which is a difference of $60 a month. From 0.5% to 10%, it's only a $60 difference. Interesting. Now, on the other hand, we have to consider Hedera's side of this. Let's say around 30% of the total HBARs in circulation are with retail stakers. That's about $800 million. At 0.5, Hedera is currently paying out $4 million as staking rewards, which is difficult to sustain, especially when you consider market conditions. Let's say the interest in your investor community has been wavering in the last few months, and you're still trying to pay out these staking rewards. Now, with the gentleman's proposed 10%, that number goes from 4 million to 80 million on a regular basis. And people are going to want their money. Where will that 80 million come from? So reading that put it into perspective for me. Like, I'm kind of glad they reduced those staking rewards, or else the company wouldn't exist today. It wouldn't exist today. There's another comment here too that I want to share. Mr. Robert Paulson, he leaves us with three very strong points, very, very profound points about Hedera that I want you to take away from this video. He says, number one, retail investors are probably around 30 to 40% of crypto investing, nowhere near 100%. Crypto is heavily manipulated, controlled, and concentrated. The idea that the value of HBAR is 100% because of small-time investors like us is not realistic. You see how the whole market, no matter the coin, moves in unison? Think about the level of concentrated wealth and control needed to do that. We're talking about massive accounts with algorithmic trading that moves the entire market. Now, for years, I had speculated on that being true. Wasn't entirely sure, but I'm not the only one that thinks that way, apparently. Point number 2, the real demand, the 5 to 10% staking rewards. This would bleed the treasury dry while no revenue is coming in. Funnily enough, it wouldn't affect price. All this is a handout to non-investors. Staking as it is directly tied to revenue. Revenue comes in, a percentage goes into the staking account, then it's distributed. No profit sharing. I think this is an extremely reasonable and financially responsible way to do it. Read up on dividends. 1 to 2% is the most common, and it was 0% in the early days before profitability. Hedera knows what they're doing. Point number 3, and oh boy, I love this one. HBAR is not a security. This means HBAR investors are not investors in Hedera. This isn't an ownership contract like with securities trading. HBAR holders have a real hard time with this one. They want to feel as if they are part of Hedera and are owed something. But in truth, holding HBAR is like holding a commodity. It doesn't give you a seat at the table. That's literally the definition of a security. You have to understand what you hold. Hey guys, I got a quick message for you. Let's say you're looking to buy some crypto, like the ones mentioned in this video. Consider using our crypto exchange partner, Uphold. With Uphold, you get access to more than 200 crypto assets through its simple-to-use trading platform. Uphold has been around more than a decade, so it is a name you can trust. With over $2 billion in reserves and $44 billion in trading volume, I've yet to lose a trade on Uphold. To the more experienced investor out there, Uphold also has a line of precious metals and national currencies for more diversification. For me, I'm having fun using Uphold's baskets tool. Uphold lets us set aside a certain amount of money to invest in different sectors of crypto. With one click, you can diversify into the big 3, meme coins, or the financial assets like Hedera, Stellar, and XTC. But listen, crypto assets are very volatile, and it is always best to manage your risk and do your own research before using any platform. I recommend Uphold because before I was an affiliate, I was and still am a user. So if you use the link below, it helps support the channel. I want to thank you in advance. Now let's get back to the video. It brings up the analogy again of gold. Gold doesn't pay me to tell you about gold, but people have made millions of dollars by creating platforms that educate about gold. So take that model and apply it to the reasoning when you ask the question, where the hell is the marketing? In the case for the token release schedule, we got 12 months left, honestly. With that, it's time for the best part. I want to thank you again for coming, for listening, tuning in. And always remember, if that money is digital, so is the hustle.